All right, what's good? So let's actually jump into a nice little presentation today. And I've been doing a little bit of work today. I really want to kind of help visualize. I get asked the question all the time. Well, like, what does it really look like to compound gains? And with some coins that may be going into their second cycle, and these are coins that you think that are going to be around for a long time, maybe 2, 3, 4, 5 cycles, right? Longevity. These are things that we want to have as assets, things that we can hold on to for a long time. That's how we can accumulate these large gains. And I'm actually going to visually show you guys how it works today. So I want to talk about how we need to understand long-term investing. One of the first things that I learned that is very important when you are learning about investing and really putting skin in the game is you really want to try your best to get a good entry point. Now, at first, you're not going to be able to time the market because you just don't know much. But like once you really do some research into a market and how we've displayed over and over again within the past 4 or 5 months how we can get very accurate on getting local lows. But you can even do that in the bear market, which I did that this past bear market very easily. So one of the best things that we can do is say, okay, how do we make an informed decision on our entry points? But then on top of that, can we also compound our wealth? So can you compound your wealth every year? That needs to be the goal. So let's talk about that really briefly. Now, one of the easiest ways to understand where everyone is positioned is on-chain data. And this has been a great benefit to us if you know, or you if you know how to understand this. This can really help you have confidence when you're buying. Okay, so the first thing that we need to know is what does real deep value look like? Now, this is the Bitcoin chart going all the way back to like 2012. A lot of data here, and so we're looking at the different periods of time, all the way from max pain there in blue through enthusiasm, excitement, euphoria, and all that kind of stuff. But we're tracking the net unrealized profit and loss for two different cohorts. Okay, so the short-term holder cohort and the long-term holder cohort. Now, the reason why you want to track both is because understand this: when everybody, so know when the long-term holder and the short-term holder cohorts are all underwater on their average cost basis. They make it easy with on-chain data. All we have to do is say, okay, cool. If we see blue vertical bars, so for example, if we're seeing these blue vertical bars here, that's letting us know, oh snap, everybody's underwater. This is max pain. This is when you say, okay, cool. I want to take some serious allocations to coins that I believe that I can hold on to, not just for one cycle trade. We want to be able to hold on for a long time. So you need good assets. And having a good balanced portfolio is how to think about doing that. Ethereum is going to be the example for today. So we've had three clear indications where you just keep adding in the bear market. And you see from, even from a standpoint of like 2015, we're talking about price of Bitcoin being all of like what, $150 to where it is now, 70K. So with that being said, let's go a little bit deeper on this understanding. Because maybe we're clearly not in the bear market. We're kind of still in the bull. So what can you do currently now? If you're trying to build up a little something for now, but then please take advantage of on-chain data. Look at these cohorts with the NUPL, and you'll know exactly when it's time. After the bear market, you just write all this out. It's going to be very easy to see when we gas out up on the top as well. So let's move on to the next thing. Now, for those that are kind of just now hopping into the market over, let's say, the past 4 months, 6 months, whatever the case may be, you might have missed this period of time back here in late 2022 and early 2023. So what we can do is use the short-term holder cohort and look at the NVRV. So this is just letting us know an over and under on valuation on their cost basis, okay? And so in the bull run, what we can see is we typically, this is the midline. There's 1, 2, 3 standard deviations. We tend to straddle the first, half or first 2/3 of the bull run in between the baseline and 2 standard deviations. So ping ponging back and forth. We've seen that here in 2016, 2017. Only on the later stages of that bull where we really start to get to these exacerbated, like we're talking about serious, in profit ratios for short-term holders. And so you see, we get up here to the 3rd standard deviation once, twice, but also 3 times. And this one is extremely high. Then we have blow off top. Then we go into the bear market. We hit it here once, twice. Now, this was like a pre-bull run in 2019. That's why we had such a big adjustment down, because, things went up too fast straight off a bear. And this one was a little bit more gradual, as y'all can see. But once again, for example, we could look at and see, okay, after you had that moment, you kind of straddle in between, the baseline and 1 standard deviation and 2 standard deviations. Only into that point when you get to this 3rd standard deviation are you really experiencing like that face ripping just rally. So this chart tells me one thing, okay? It tells me that we have not gotten that face ripping rally because we're not 3 standard deviations above the short-term holder NVRV. So that's to come. We are the bull run though, because we're not really going below the baseline. Like we barely tapped the midline and we're below it just barely. So we have 4 different occasions, and really 5 with this one recently, that we've even, gotten closer or just barely under the baseline. So we're there just like slightly out of profit, and these are really good supports. So bull market support is the green light to DCA if you're just getting started, within crypto. Just want to get your feet wet. And I always say, like, once we get above a certain market cap for the altcoins, especially, what is it, like $1.2 trillion? You don't want to be investing in any altcoins. And so we're still not at that point, but I'm gonna let everybody know, it's like, hey, everybody just chill. You don't got to go crazy. Let your stuff compound, and we're gonna see how those numbers work. But that's to come. So we're gonna get that really, really, really expansive time when we are 3 standard deviations above the baseline for the short-term holder NVRV. So this is telling us a couple of things. And we know we're in a bear market when we go, 2 standard deviations below, right? And you see that consistently. So this is another look on making sure that you are getting good to better entry points than versus like, let me just go with how I feel and, how I'm just looking on my phone. It's like, really look at the data and be smart. So this is helpful. Better entry points is how you get better compound returns through time. It's key. Taking action in the bear market is the first rule. So taking action here with a whole lot of heavy DCAs. We're talking about as much money as you can throw, as you can afford. And then if you want to top it off and trickle it in as we head higher, you want to use the support on the baseline of the short-term holder NVRV. Okay. So next, now there's a topic that it goes unsaid in crypto. This is 100% TradFi language that people in crypto don't even understand because they're just trying to focus on the next pump and just get all the money just right now. You got to understand, long-term investing is how you really become wealthy. A lot of people want to just get to like that. Oh man, I can buy this car, I can buy this and that and all, have all these. It's just like, here's the thing. If you think about just keeping good assets for long periods of time, that's how Warren Buffett got to several hundreds of billions of dollars. And it came through compound growth through time. And the higher the numbers, so the more that you have growing for you, the larger that you can get on a compounding scale. Now, you want to look for an asset that has a high compound growth rate annually. So let's go through the information. So the definition: compound growth rate measures the average annual growth rate of an investment over a period of time, and it smooths out the volatility. So, crypto is very volatile. There's a lot of things that are scary for people that are just starting in their first or second year in crypto. Only when you've stuck to a bear market and a bull run can you start to say, okay, I can smooth it, I can ride it out. But if you're just going on your intuition, and you're just starting, you need to understand what the data is telling you and go based upon that to make good, sound investment decisions. Okay. So the formula for the compound annual growth rate, you're going to take any asset. So you're going to take the starting price and a starting date. So let's say, with our example, we're looking at like Ethereum from 2019. So the first of 2019 and the finishing date. So which is like today's date, for example. You're going to divide that. So you're going to go ahead and divide that. You will get a number of years that you're doing this through. So this is, from 2019 to now, that's what, 5 years. And you put that under 1, subtract 1. Okay. So this is the formula. And I'm just giving you the example with the Ethereum. Now, this smooths the volatility. So this provides a consistent measure of growth by averaging out the fluctuations. And that's the key thing. You want consistent measured growth. Like, you just want to be making consistent more money every year. That's the key. And then it gives you a comparison, because you can compare the CAGR, or the compound annual growth rate, between assets, between Ethereum, Solana, whatever, stocks, Apple, Nvidia, whatever you can think of, Home Depot. There's a lot of stocks to choose from. Real estate property, 401ks, mutual funds. You can look and say, okay, what just grows better through time? And these numbers don't lie. Okay, so this is really key. And it's a nice gross estimation for what you could potentially expect in the future without being too bullish or too bearish. It's going to give you a nice average. This is very key. And it tells you the risk assessment, helps evaluate risk reward profiles and balancing growth and stability. And so the applications of how we use this, through an investment, so evaluates the historical performance of various assets like we're talking about. You can even do this for your business growth projections, right? All the time. If you're ever starting a business, you want to have a business plan. You want to say, okay, how can we grow annually? Financial product marketing. So this is something that those guys that are pitching the Ethereum ETFs, they definitely need to talk about this aspect. Well, hey, look at the growth rate per year. Can't lie with these numbers. And then, for personal finance planning, this is what we're doing here. Everyone's in charge of their own finance, but it's all about learning. I said it in the Vault of Crypto earlier today. Investing is an IQ test. The results you get are based upon what you know and understand. And this is why getting access to information, understanding just basic math, but understanding how assets move through time is very interesting and very beneficial if you know how to do it, versus just taking shots in the dark, because that's what most people do. And they're wondering why things don't work out for them. So the compound annual growth rate summary offers a realistic, comparable measure of long-term investment growth, aiding in decision-making and financial planning. This is key, okay? So here, I've already done the math, and it's very beautiful to look at. So what we have here is an example. Let's say you're a person that's like, man, I don't have that much money, man. I'm not really feeling like all this stuff. I don't want to be looking at these charts all the time. It's just too confusing. Oh, okay, cool. In this scenario, this is an investor on the first of every year. So January 1st of 2019 all the way to 2024, they invest just $1,000. $1,000. So most people make a decent wage throughout the year, anywhere in between, on the low end, $30,000 up to who knows how much, a couple $100,000 if you're balling out. That's great. But even somebody with just $1,000 a year can get significant growth when they compound every year. And so, for example, $1,000 in 2019 all the way to 2024, look at what that does. You would have made $28,000 in that first year, because that was a really good year for Ethereum. You would have made an additional $15,000 in 2020. You would have made more in 2021, 2022, 2023, 2024, and so on and so forth. As this goes on, all of these numbers get higher, by the way, the longer that you hold. Barring the fact that Ethereum continues to go up and trend higher as it's been. And then so you go from 1,000, or I guess you can say you have 6 different periods of when you invested. You invested a simple aspect of saying $6,000 over a span of, really 6 years to come out with 60 grand. And this is not feeling the market, getting price highs and price lows. This is saying, hey, on the first of every year, and I'm not going to look out, I'm not going to care about it, you could have a very nice valuation of $60,000. And that's what compounding can do. A lot of people struggle to save $6,000. Imagine just being able to do something like this and compound with Ethereum or whatever. Solana or Pulse Chain or whatever that you see has the ability to grow consistently through time. Good assets, right? And we know there's a lot of coins. Phantom is going to fall in this category. Like, I can't wait to do this for Phantom in 2-3 years from now and say, hey, this is how it's gone for me. As it's been going pretty well so far. So beautiful. Now, let's talk, because this is key. And before I do this part, let me actually give you all a visual. So let's pull up this visual here. Okay. So what I'm talking about is the aspect of saying, okay, what I've done here, I've actually pulled up the price points on the first of every year from 2019 all the way to, recently 2024. And you would have been able to buy $1,000 worth of Ethereum. And the price at the time was $129. 2020, about $137. Huge ramp up. Now, you made majority of your money here, which is nice, right? Huge ramp up, but you're buying higher. So you're not being strategic at all. You're just doing something basic, something easy. The first of every year. Buy it at about $1,100. You buy, here in 2022, a very high valuation. Still, so even with buying high, you still get great returns through time. 6 years. It's not that long. $3,800 some change. Here in 2023, you get a little bit better price at $1,200. And here 2024, about $2,300. So with that being said, that's a beautiful thing, because currently at this price of $37.38, so $3,738, you'd have $60K just from doing a simple strategy of just easy buys. Boom, 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 boom. First of every year, compound growth. And then so with the calculation, what does this tell us? This tells us that the compound growth rate, so let's go back to it. The compound growth rate currently from this data point is 83.68%. So remember that number, because that is tremendous. That's really great. The compound growth rate would increase even further if you go back in time. So when Ethereum was first started back in like 2015, it'd be way higher. It'd be like 180%. So, but we're going with something conservative, something reasonable, something realistic. Okay. So there's that. Now, what happens if you use the Volta crypto tools? So what happens if you use the Hatter, so the Heikenhashi Trend Reversal, to invest $1,000 clips? And we are being a little bit more strategic, okay? So what we find out is, okay, here we have these data points. And like I said, because now, okay, we know how to look for deep value. We understand what a bear market looks like once we understand on-chain data. So the previous charts, okay? We're able to get those $1,000 clips at a little bit more strategic time. So what you notice is when the prices were higher for Ethereum, like towards the top of the bull in 2021 and 2022, it didn't have us buy. The Hatter doesn't have us buy extreme tops or extreme highs, But the beautiful thing is, just from 7 solid DCAs, so 1, 2, 3, 4, 5, 6, 7, okay, you would have $127,000. And this is just going back to 2019. And this is 115% better outcome than just doing it on the first of every single year. So using tools to your advantage, as you can see, has a tremendous outcome. Okay, so let's actually show you the chart of what that looks like. And so now we use the Hatter. So the Hatter gives us, and we're looking at the buy points, right? We're not really looking at the sales, but it gives us a little bit more strategic buy points. So we're talking about points like this, being able to buy that beautiful, under sub $100 Ethereum, right? Being able to buy, really good $130, Ethereum there. You're not buying up here, right? We don't have any green buys up here. So with the Hatter, but we did get additional buys in that deep value range. So we're talking, $187 there, $1,000 clip. Boom. There you go. Another $1,000 clip at $130, give or take. Okay. We let the bear market run through and then we start up again. Okay. So cool. Boom. We got a nice buy here, $1,000. Boom. You get a nice buy right here, about $1,200. And then you get another good buy around here about $1,600. So you see how we're condensing down the price, getting better cost bases by using our tools here. And then so this is what gives you a little bit more strategy. And so instead of just only getting 100, or excuse me, instead of only getting 60K, you've got 127K. That is a heck of a difference, you know. Like that 6 figures feels a little bit different than just 5 figures. But here's the kicker, because this cycle is not even done. So what we need to do is, okay, these solid buys are 7 times in 6 years. That's not like doing a crazy amount of studying, and it's just like, all right, cool. Like I understand what the game is and how to do it. 2 cycle lows, and it's not even about selling at the top. You just keep growing. So what happens is, so once again, you go from 7K. Let's write it out. Like let's make it plain. We go from 7K, you know, through this time. And think about it. You might be a person that could invest more than 7K through 6 years. You might be a person that can invest 30K through this time span. So just, you know, multiply that outcome, the $127,000 times 5. And that's what you got. You got close to 600 and some change, whatever the case may be. But we go from 7K to 127K by using the Hatter and understanding on-chain data. 2 very simple things. And so now what does this do when because we're mid-cycle for Ethereum? What happens with this growth, you know, when we just go ahead and keep moving up? And so it's very nice because we don't even have to get all the way to the extremes of, yeah, we may not get to $16,000 Ethereum. That would be great. I'm rooting for that. But even if we go with something conservative, so go with something conservative, saying, okay, let's see if we even get to that 10K. Now we go ahead and we take this cost basis and we go up 2x. And then so that's really just a multiple of 3. So that's a beautiful thing, because now we have a larger number. We are working with compound growth from 7 buys. So now we're working with, you know, we'll write it up here, $381,000. And remember, that's off of 7K. 7 buys through time. We're not trading. This is just easy math, easy investing on a major asset, Ethereum, that has an ETF now, which is, you know, people didn't even imagine this, you know, even 2 years ago, and now it's a thing, you know. So imagine what happens if you, and this is not even getting its first cycle. Let's say you miss its first cycle. So now we take coins that are in their first cycle, or they're going into their second cycle, and we can envision how your wealth can grow through a span of, you know, 6 to 8 years, right? This is a beautiful thing. And just imagine once we go from a cycle from here. So instead of having to work a 401k, and because we're going to do some comparisons here in a second, like 401k and work for 30, 40, 50 years to retire, like, you know, with crypto, with little money, you can make it happen in 10, 12. And if you're really serious, you know, you really compound and try to put more than $1,000 here, you know, and it happens even faster for you to get to those larger numbers, 7 figures, and potentially, who knows, 8 figures if you are somebody that can invest, you know, 6 figures in a bear market. And that's a beautiful thing. So it's all about, and keep y'all's income, y'all. Like, try to expand your income. Don't just rely on your investments. Keep trying to grow your income. Never change that. So just a little bit of alpha on that front. So this is a visualization of what compounding looks like. So now let's kind of take it back. So the interesting thing is, let's actually compare. So the compound annual growth rate between Ethereum from, you know, that date that we talked about, 2019, to something like XOK. So XOK represents the technology sector in the stock market. This is the best performing sector in all of stocks over the past, you know, 15, 20 years. So we need to understand that this 23% annual growth rate, that's okay. 83 is much better. But what this chart shows us is how linear this is. Like price for Ethereum and XOK back at this time in 2019 were a little bit more similar. Like, Ethereum was like $160, XOK was like $70, But you see the disparity because now XLK in 2024, just 5.5 years later, goes from $70 to what is it now, like 180? While Ethereum went from about 160, 180 bucks to basically dang near 4,000. So the compounding growth rate is way better. Linear versus exponential. You want exponential assets. Very, very key. So I say that to say this, identify good assets early, hold them for a long time to get to the large numbers, okay? Yes, you can buy a house for this. You can do a lot of things. You can pay off all your debt. You can do amazing things with this kind of money, but it's all about having some just general strategy. But even if you didn't have the best strategy, you can still make it happen with consistency and time. So with that being said, I hope this video helps you guys understand the concept of compound annual growth. You want to look for assets that have good compound annual growth. Solana is something that is going to continue to have compound annual growth that is very good, outpacing many things. There's nothing in the stock market that comes to anything close to crypto in compound annual growth. Maybe Nvidia or like one or two other stocks. But with that being said, as a sector, crypto in general, if you even stick to things that are in like the top 10 on coin market cap, I would venture to say you'd be pretty good through the next 10 years, if you choose just one or two of them. So this is the key. This is how you do it. This is how you take your personal finance in your hands. It's how you win with simple things. So definitely, you want to get access to the Hatter amongst the other 7 indicators that we have to increase your skill set and knowledge and understanding on when to do certain things, right? So something like this, the Hatter. Come over to Vaults of Crypto. So vaultsofcrypto.com. Very, very useful. We've got free stuff on here. So on-chain data, definitely got some crypto news, some post-chain charts, post-chain, definitely still don't give up on it. Trust me, time is the key here. But press enter the vaults. It's worth it. You will be entered into the Telegram group and get all of these indicators on TradingView on a monthly basis, So we're growing. Good group of guys and gals that understand how to go about this thing and really make it happen. This is not a trading Telegram or tool set. This is meant for you to become wealthy through time. So if that's something that you want to do, hop on in and we can definitely get things going for you. So that being said, I appreciate y'all. Definitely jump in the votes, and I'll hopefully be talking to y'all here in the comments pretty soon. All right, peace.